important risks in trading. Hi, it's Charlie giving you Saturday's video. The first one is the obvious one, and that's your risk per trade. Now, we just had an inquiry, Sam had an inquiry come in this week from a trader who said that they risk 8% per trade and that they were willing to risk more. So, do we think that's a correct amount to risk per trade? No, we don't. So, what is a correct amount to risk per trade? I would recommend 1%, or less, some traders, I appreciate, will trade at 1.5% or maybe 2%, but that would be really a max at 2%. And for anyone who's starting out, you want to be down at the lower end, 1% or less, rather than being at 2%. The problem that we have is that you have people who say, well, I've only got a small amount of capital in my account and I need to get as much growth on it as possible. That's the wrong way to look at it. Because if you are risking, even 3-4% per trade, the risks of deep drawdowns and highly volatile trading accounts it's going to be hard for you to be able to deal with. So, and the risk of course, the higher the risk per trade, the risk of blowing up an account increases as well. So my general recommendation would be to be around about this or less. I have plenty of members who trade at 0.3 of 1% per trade. I appreciate that some people will be saying, yeah, but I want to make hundreds of percent a year. Yeah, but you always have to look at your risk first. So build up to that sort of thing, and don't worry about the money, because I had this inquiry recently, another one where someone said, yeah, I know, but I'm trading with whatever it was in their account, 1,000, 2,000 in their account, and if they only risk 1% per trade, it doesn't feel like they're making much on the winners. And I said that's the wrong way to look at it. You need to look at the percentage return that you're making rather than thinking about the cash amount, because of course if you've only got $1,000 or pounds in a trading account, then of course the cash amount, even if you have some nice trades and you have a nice trading period, it's not going to amount to a huge amount. But think about the percentages and think, well, if I can make this percentage on this sort of account balance, what could I do over time once the account does grow and I can add to the account balance as well? Then then it becomes much more tangible, and you're still doing it in the right way. That's what's most important. You're doing it in the right way, because if you risk too much, yes, you can make more money from it, but you can also blow up or have such deep drawdowns that you struggle to come out of it. So anyway, that's the first point on risk. The second point on risk is the risk of when you're in multiple positions. So portfolio risk, really. So if you are trading in multiple positions and you have multiple positions open, then you do have to consider and always be aware of that portfolio risk, that you could be in 10 different positions, and therefore, in theory, even if you're risking 1% per trade, if they all lost, you'd be very unlucky, but it can happen. If they all lost, then you'd lose 10%. And is that going to be comfortable for you? So something else to always bear in mind is your portfolio risk. Are the positions you're in, are they highly correlated? I.e., if one goes down, then it's likely they're all going to be going down, or are they negatively correlated? So now, it's nothing wrong with being in multiple positions which are correlated, but again, you need to be aware of that and therefore risk less per trade, per individual position. So as a collective, it's still manageable. You've not got, let's say, 10% on the line, you've got 3% on the line or something like that, and which is much more manageable. There you go, a little bit on risk there today as a result of a couple of inquiries there, and because I don't want people risking 8% per trade. That's craziness. And have a lovely weekend. See you next week.